Okay, we're back. And I am going to show you now the second way we can record an adjusting entry for our prepaid expenses. So like we saw with unearned revenue, there are two ways to record the events. So I'm going to have to scroll up and down here between the two problems because I can't seem to fit them both. But our first way, what we did was we charged the entire $600 to prepaid insurance, which is an asset. And then we had to adjust accordingly to take out of that asset the portion that reflected expense for the time that has passed. Well, now what we're going to do is, let's say we paid that $600 and we immediately charged the entire amount to expense. We are not supposed to, and we were going to debit insurance expense $600 and credit cash $600. Okay, so like we've been saying, yes, we do not recognize an expense until it has been incurred. At this point, when we relinquish the cash, we are going to charge it to expense and then make the adjustment to correct the balance in this account, expense account, to correctly reflect what is truly an expense at the end of the year. So let's consider this again. So now if I'm saying this entire thing, this entire year, not thing, entire year represents insurance coverage worth $600, and we paid that at September 1st, and we know 4 months have passed, then we're saying these are the months: January, February, March, April, May, June, July, and August. Right? 8 months. 8 months for which we have not incurred an expense yet. It hasn't happened because the time hasn't passed. So those 8 months here, the equivalent in dollars, which would be $400, needs to be taken out of expense. It truly is not an expense yet. It's a prepaid. So we are going to now add our prepaid insurance to our books in the amount of $400. We're also going to lower our insurance expense by $400 to reflect the fact that really only $200 of it has been earned. So how does that look? Well, on 9/1, we debited $600. And then at 12/31, we're crediting $400. What does that give us at the end of the year? It gives us a net balance, debit balance of $200 in insurance expense. Well, guess what? That's exactly what it should be. This is the portion of our spending that actually has been incurred as an expense, and that is $200. All right, we will then at 12/31 recognize and have a $400 balance in our prepaid insurance. Okay, so we're going to include a description here to reduce expense and record a prepaid. I'll highlight this again. Well, I'll outline it in the box. And then highlight this in blue. Okay, so that's the second way you could possibly record this event. At the end of the day, if you look at our T accounts, hopefully I can fit them both in, our prepaid insurance at 12/31 under either method is still reflecting $400 debit balance, which is appropriate. Our insurance expense that was captured was $200. I don't have the T account up here, but as you can see, we capture $200 in insurance expense up here. So the end result is the same. It's a matter of preference. And you'll probably find as you work at various companies that maybe it's an even split. Some do it this first way and some may prefer the second way. All right, back down to our second method. So as with all the other adjusting entries, let's consider what's happening here with this entry. Well, debit to prepaid insurance is increasing a prepaid, which is an asset. So we're increasing our assets. And our credit to insurance expense is actually lowering an expense. That's what we're doing with this adjusting entry. So what if the entry was never made? Well, if you didn't do this, if you didn't debit prepaids and increase your assets would be understated. Additionally, if we did not credit our insurance expense and lower it, our insurance expense would still be stated at $600. That would be too high. We would be understating our net income and overstating our expenses. That would be the result. The adjusting entries are very important to be aware of in an accrual environment. And again, they capture the timing differences. Let's just follow up with our slides, what's left. Again, for your adjusting entry regarding prepaids, these will be your shells. You can either debit the expense and credit the prepaid. That was the first way we did it. Or if you initially charged everything to expense, then your adjusting entry would be a debit to prepaid expenses and a credit to whatever the expense is. Okay, so the slides that I'm skipping over, I discussed everything going through the example on the Excel spreadsheet, but please go through all the slides, go through the Excel spreadsheet again and again. This slide right here is just a summary of our adjusting entries and the effects on the financial statement if not made. This is a very important slide. They will test you on this, guaranteed. Those are your 4 basic types of accruals. Go through the slides, go through the section 5 of your workbook. Once again, go through all the problems and the 2 quizzes at the end to help prepare for the exam. I will continue. We still have more to the workbook to do, but I'm going to end the screencast here and I'll see you at the next one. Talk to you at the next one. Sorry.